Perfect. Awesome. So really quick, I want to introduce myself. My name is Blake. I'm one of the traders with Blue Capital. And today is kind of a special session. I'm going to show you guys something pretty cool. A lot of you already know about this, but you are able to change a lot of things on the chart. I'm going to show you how to make them look completely different than how I've been showing them in the previous sessions. And then I also want to do some more interactive ways of doing this as well, where I want some of you to actually take control and show me that you know what you learned. This will be a slightly more advanced session than usual. I'm switching now to do intermediates instead of beginner sessions. So I won't be going over what a pip is. I won't be going over how to calculate all that sort of things. But I think that you'll hopefully enjoy today's session and learned a lot. So let's go ahead and get started. So right away, you can see this chart is completely different than what it usually looks like. Usually we have the white background. Right now we have the black background. And this is really easy to do. I want to start off by just showing you some cool settings, just because I haven't done this yet. And I thought, why not? So all you have to do is you right click anywhere in the chart, you click on settings, you go to background, and you can do this way, or it's way easier just down here, the theme, you can switch from light to dark, and then it changes all of these as a preset for you. Some people think the dark one is easier on the eyes. Some people think the lighter one's easier to see. There's a lot of pros and cons for both. So just for the theme of the session, I'm going to do the whole session in dark mode. And I'm going to show you some other cool things. So what you might have already noticed as well is that also changes things like the Fibonacci's. We see that we've had the Fibonacci's before, but now they're slightly different colors, which is the same thing. You just have to right click on the actual Fibonacci levels themselves, not in between. It has to be on the actual level or on this line. That line is just connecting the high and the low. So anywhere on that line or on one of the levels, and then you click on settings and you can edit it in here. So speaking of that, I want to show you a couple of extra levels that I like to use as well. And I already have them preset on, oh, actually one thing first. Also for the Fibonacci's, some of you already have this where it extends infinitely to the right, which is sort of helpful for some specific circumstances. It'll just make it easier so you don't have to keep on extending it. It just makes it infinite. And I'll show you how to do that really quick. So all you have to do is you go to settings again for the Fibonacci. Oh, that wasn't even it. That was the normal settings. On the Fibonacci settings. And then you have to click on this button right here. This is extended lines. So you just click on that and it will make it go forever that way. I wouldn't suggest doing, I mean, if you do draw your levels backwards, also you can just click on this button right here, the reverse button, and it fixes it right up for you. So you can have the 618 and the 38.2 in the correct places that you like to have them at. It's really preference. They're the exact same thing, just backwards. So as long as you know what they mean, you know, from the base, this is actually backwards right now because you go from the base, the most recent point, then go up. So we would not want it reversed in this case. This is how you're supposed to draw it. And I'm also going to go over another level that I really like. So some people like to have the filled in areas just because that will help you. If you look at it a lot, oops, if you look at it a lot, then you'll know what zone you're in. And because of the zone, you'll just see the color, and that's just helpful for some people. But I'm going to show you exactly how you don't have that as well. So if I make a new one here, I thought it already in the settings. All you have to do is, if you don't want any background at all, you just unclick that, and this is the normal. Delete this. This is the normal Fibonacci with just the levels. It's a lot harder to see this way. I'm trying to move it around so you can see it. The other lines are kind of getting in the way, so I'm going to move this up here just to make it really clear exactly what I'm talking about. And right now they're extended as well. So here's all the normal levels, the default levels. I only have to put down to here because it's extended, so it still hits this point. And we can see this is a perfect example of a Fibonacci use because it hit the 5 or the 0.5, excuse me, right away. So this is the most recent area. And then it came up, touched and bounced off the 0.5, which again, you know that that's the initial one because of how Fibonacci is calculated. With the number sequence, I'm gonna go ahead and write that out just for people that haven't been to the other sessions yet. So the Fibonacci sequence is just where you start with the number 1 and you take the 2 previous numbers to get the next number. So let me just write out a couple of them just so you can get the idea. And then how you get the ratio is you take the previous one divided by the next number. And so that approaches 61.8032%. Of course, we ignore the 0.32% part of it because that's too specific for trading. No one really cares that much. That's for big numbers that are in the thousands or millions of digits even. That's the number it'll approach. However, for the first one, we see 1 divided by 1 is just 1, so who cares about that? But the very first non-1 number is 1 divided by 2, which is exactly 50%. So that's why we have the 50 on the chart, is because it's the first one. Now, this is not 100% consistent. It's only good for retracements. So again, this is a retracement, not an extension, because it goes into the chart and not out of the chart. So we see initially right here, the 0.5. And if I want to change that to percents, that's really easy as well. It's right here. You just have to click that. And now I can see they're all in percents as well. One other thing I like to do is add a couple other ones. Ones that I really like, you definitely need to have the 1618. That one's really crucial. And then what I like to do as well is add a couple other ones. So one that I really like is -618. Oops, there it was written. -0.618, excuse me. And so what that's going to do is, oh, I just forgot to select it. Don't forget to select them when you're making them. You got to click on this to actually have it. So what that'll do is it'll just have the 618 in the opposite direction or in the extended direction. And you'll know that's usually a pretty good take profit point if it does go below your levels. So in this scenario, we see that it immediately respected the Fibonacci point at the 0.5, and then decided to break upwards a little bit more. And then when it finally stopped, at least initially, was right around that -618 point or the extended area. So it's really fun just to mess around with your charts and basically see where everything goes and see different ways to do everything. One example that I really like that I learned recently actually is on the euro, which I don't really like the euro, to be honest. I don't usually trade this one. But one thing I do like about this one is something I learned recently. That is with very long term. I only suggest trading the euro on a very large time frame. And actually for this one, it's kind of hard to see. I wonder if it'd be easier on light mode. Yeah, so just for this example, I'm going to use light mode on this one. So this is using the pitchfork tool. I know that a lot of people really like the pitchfork and everything, but I'm going to show you a new way pitchfork tool that you probably haven't seen before. So I'm actually going to go ahead and delete everything to make this really, really clear. So to get to the pitchfork tool, you probably already know this. It's right here. It's usually default. This is called the Andrews pitchfork. And all I'm going to do for this one, I think it's, yeah. So it's usually like this. When you draw that, I drew this one first, the bottom one second, and the top third. And this is somewhat useful. It's also not perfect. I need to correct this a little bit. So you see that it's kind of useful. You have this area here where you can see it kind of bounces off. But it's not that useful. So what you can do instead is you can use a different kind of pitchfork by just going to the settings of the pitchfork. Excuse me. So what you do is on the style section here, instead of doing original, you can do one of these other ones. In particular, I want to look at the modified shift. And what that does is it used the halfway point for the bottom and the halfway time in between this point and this point. So in other words, the end of the pitchfork is right here, right where my mouse is. And if we do that and we look on more recent times, remember this is a very long time frame. This is since 2009, 2010. We can see very recently, this is one indicator of probably a very strong reason why price decided to stop right here recently. Relatively recently, of course. This was earlier this year. Again, this is a very large time frame. So this is just one thing we can use to add to our Confluence tools. To our Confluence to make sure that we do have a good trade in general. So along with this, we wouldn't want to enter this trade just based off this one pitchfork tool. That would be absolutely ridiculous. That would be a shot in the dark. We can see that if we use the bottom here, we can see if there's a point right here. The recent time, relatively for the time frame, use that. It came right up to the 618. So this is backwards. This is backwards. So again, all we have to do to fix that, go to settings and reverse. So now the 618 level is almost exactly where the top was, along with the confluence from our pitchfork that we just made. So you can see a very strong indication that price should go down from this particular point here. Of course, this is using backwards data, so we do know that it already did do that. When on the euro, you have to be really lenient. This would count as a hit on the 618, even though there's probably maybe even 100 pips off there or something. 30 pips off. So it's pretty close. Close enough for this time frame, just because it's so long, and so that's a strong reason why price most likely did reverse once it got up to that point there. Also, what we can see that has not happened yet on the euro is we see this big gap here. Right here. I'm going to go and highlight it just to make it super obvious where I'm talking about. This gap here. So with this big gap here, this was because I think it was the Italian or French election. I forgot which, but there's some major news event where one of the politicians wanted to leave the EU and one of them wanted to stay in the EU. What ended up happening is the politician that wanted to stay in the EU ended up winning. So that's very strong for the euro. Again, when this goes up, when euro strengthens, euro USD goes up, which is why it gapped up so much so quickly. So because they won, there was this giant gap here. So this is probably the biggest gap I've ever seen on a major currency pair. This is a 153 pip gap on euro USD. That is absolutely gigantic. And so this has not fully been filled yet. It doesn't necessarily need to, because it was a strong political event that is an entire country leaving your currency is a pretty big deal. So I do see overall super long term. I mean, this would be a position trade, not even a day trade, not a swing trade. The euro should come down very, very long term. I'm not saying this is a good entry at all at this point. Definitely not trying to imply that. In fact, looking at this a little more, we can kind of see a head, left shoulder, and right shoulder potentially to form. And that would then be, I'll show you exactly what I'm talking about. Potentially this could happen. Of the right shoulder forms if the US dollar weakens, and then the US dollar strengthens again, at least filling the gap coming down there. So if we do see long term, or this is very, very long term, euro comes up all the way to this level here, we would most likely see that would be a price reversal point there, probably price reversal zone. And also let's double check by using our fibs. Let's not have the drawing tools on there. Thank you. Oh, can you show where you took the picture? Yeah, I'll show. Sorry, is someone not muted? And I will show where to draw that pitchfork from again. Okay, looks like everyone's still muted. Yeah, I'll show the pitchfork again really quick. So on this example, again, we originally had it right like this. So I started by having the top of the pitchfork right here, the bottom, the second click right here, and the third click right there. And then what we do after that is we go to settings, we click on, oops, sorry, the settings of the pitchfork, not the general settings. And then we do style, modified shift. And let me fix that a little bit. It's very sensitive. There we go, that's close enough. So again, this Fibonacci is backwards. So very easy to do. Uncheck the reverse. So what we could probably see happen is, look at this right here at the 618 level, just so happens to be where the left shoulder formed if this is going to be a head and shoulders formation. I'm not saying it necessarily will be. I could definitely potentially see this just going down now and ignoring the whole head and shoulders thing. I'm just saying if we do see the price come up there, then we know we at least have several confirmations already pre-planned to short it at this level. So I'll go ahead and highlight the level. Maybe if we keep this chart, we can see in the later distant future. This is, by the way, this is in January, was where we probably see this happen. If it does happen at all, we would know that somewhere in that area, it should be good for a long-term position trade short if you ever want to get into those. So let's see what else we're going to talk about. Perfect. So one thing I do know this is the intermediate session, and most of you probably already know this. But if we go on to, say, AUD USD or any pair, I don't know, this is, okay, this is some beginner stuff. So in how long? In 7 minutes, 20 seconds, there's something very big that's going to happen, very important. I know that most of you already know. Wait, what? Oh, how do you know when the Fibonacci is the correct way? I will show that in just a second after. I'll do it while we're looking at this, actually. So so in 6 minutes, 50 seconds, who knows what's going to happen? I go over this on almost every single one of my sessions. It's a big thing, happens every single day. Who knows what's going to happen very, very soon? 6 minutes, 30 seconds. Yes, correct. We will see the new day change and the swap. So yes, correct. So right now, I don't have the blue dotted lines on my chart. So how do we even know if it's a new day or not? As we go here, we go to time zone and sessions, and we click on session breaks, and we see that it seems like there is just about as much space from this blue dotted line to this blue dotted line as there is from this blue dotted line to where price currently is at. That's because this is the last candle that's going to form for the new day. And we experience the swap fees at that point. We experience all that good stuff. So that's going to happen in 5 minutes, 47 seconds. While that's happening, I'm going to explain how you know if you drew your fibs correctly. So one of the easiest ways to know, this works really well on Japanese pairs. It does work on all pairs, but I want to show you a good example. So I'm going to look at UJ. You have the extended mode on. I'll show you again how to do that, just in case anyone forgot. Again, extended right here. You definitely have to have this on for this. And then once you have extended mode on, is you move the price much, much farther back than the true top or true bottom, depending on which one happened first. And that's how you know if this one is accurate, is what you're looking for. Let's see, this doesn't even seem to be that good of an example. It seems to be an okay example. What you want to see is price in, I'll hide the section I'm talking about. From here, before the second hit, you want to see price bouncing off the levels already before even the second and final hit. If you do not see that, it's most likely not a true bottom or top. So on this example, I don't really even see too many points on this one where it's hitting, which could actually be an indication that maybe this is not ready for this to be the bottom yet. I do see some. So we see one here. We see, let's see. We see this one. It's a really good hit right there. I'm just going to highlight a few of them. And again, we do not use the top because that was a given. So that does not count as one. This does. So we can use the bodies and the wicks. They both count. Overall, I don't see too many before the bottom that happened so far. So what I could easily see happening is if I move this back to normal so we can actually see the levels, is I could see it's at least hitting the 0.5 in the very near future and bouncing off and going lower. So what that would mean, if that does happen, is very temporarily, the US dollar would increase in strength just a little bit more against the Japanese yen, just 27 pips worth. And then at that point in time, we would then see price potentially move down. We do have two levels, which is kind of annoying. We could also see price going all the way up to the 618. And then, I don't know why I'm drawing a circle. Price could come all the way up to the 618. This would be a lot safer. If you are looking for a short on UJ, I would wait until this one, even though I do think it will bounce off that one, just because this would be a lot safer. You know that if it does not respect this, then you're already good for exiting the trade. You don't have to risk as many pips that way. from this point, we could even look at, again, this level that we added, the -618, all the way down here. I could see that being a very likely point that this could continue to. And again, the -618 should be the same thing as the 1618 if we draw it in reverse. See that? Now the 1618 and the -618 is at the same point because I drew this one the opposite way. So it's just where our extended value is. That's why I like to have the -618 as well, just because it's in case you draw your charts the other way, you still have that price level marked. And what's kind of funny is if we look at where this is, we can see that there is a price reversal zone right here. It's not exactly on the point, but it's definitely very, very close. So I would at least say it's in the zone. It might be a body hit. I don't think so though. Maybe let's actually check. Let's see if this is a PRP or not. So we select this tool, we look right at that level. We have the blue. Again, I always use blue lines for PRP points. So it's very, very close. I would say it's close enough to count for sure, for at least noticing it. So overall, I'm bearish on this. I could see this coming down more. But it did also make this new high, so there's a little bit of mixed results in there, or mixed analysis in there. Josh, sorry, what do you want me to say again about the -618 level, or what do you want me to go over again? Also, I just missed this. Let's go back to the AUD really quick. So we see, I like to watch it live. We just missed it though, by 30 seconds. It made a new blue dotted line. It's now a new day. You should be receiving an email pretty soon from your broker saying, this is what was traded today. This is how much you lost, gained, and all that sort of things if you made trades today. So I'm going to check what the swap fee would have been on AUD USD just to have a little bit better picture of this. And then, Josh, did I already go over what you wanted? Oh, let's see. Oh, perfect. How do you apply these new daily? So Alex, the new day lines, not sure what you mean by the new ones. Are you talking about just the the Fibonacci ones? Is that what you're talking about? Let's see. Also, I just pulled it up, and if you were holding AUD for the buy position, you would have made in profit 80 cents per standard. Oh, the day breaks. Okay. Oh, okay. The price reversal points. Yeah, I'll go over that in just a sec. So for the AUD USD, if you were holding a buy, you should have made 80 cents per the swap. But if you're holding the short, you should have lost $5.96. But the thing is, you would have been better to hold the short position anyways, at least so far, if you're to get out now, because it already moved down more than 80 cents worth, at least. So yeah, let's go back to, I think we're looking at UJ. We can go back over the price reversal points. So for these lines, all you have to do is you click right here. It should be the default one. You might have the trend line as default. You just click on the arrow. You get the horizontal line tool, and you just place it on a level approximately where you think there's a price reversal point. So I think that there's approximately price reversal point right here, just because there was a clear bounce off that one. And we can see, then we'd have to test it afterwards because it's not good until we test it. But we do see, at least right here, I see that red candle had a wick that touched there. I see that there was a body that touched here. There's this, all these bodies and wicks that touched there. So it's using it as both a floor with right here and as a ceiling. So we know that this was a valid price reversal point. It's not super strong necessarily. We don't see too many hits in recent past data, but it's definitely a valid one at least. So for this one down here, this is wrong. We want it right there. We at least see, let's see, right there. I'm using the bodies of that one. I'll zoom in so you can see it a little better. The bodies of these candles. And then we see in past data, all these lines, these circles, we see, I mean, there's so many other circles in the way when I was just showing how Fibonacci's, but right there, there's lots of hits right there as well. We can just see that there's lots of good areas. This is a pretty strong PRP. I would say it's even stronger than the other one, which is also right about at that 618 level, indicating that this is most likely, if it were to come down, where it would most likely stop coming down. If it did break this zone here, again, you draw the zone by using the rectangle tool, and you definitely at least want the bottom of the wick of this one, because that's a really strong point. You'd want it at least like that. And I'm actually using, I'll show you where I'm using the top. I use this top right here. I'll zoom in to make that more clear. I use the bottom. Oh, it's actually a little off. I meant to do it like that. So I put the bottom of this wick as the top for the price reversal zone, or the PRZ. And then I use the bottom of this wick right here inside that circle for the bottom of the PRZ. And then, so, oops. So you can also make these go out forever if you want. I usually don't like to do that actually. Some people are like that. You just change the settings here and you can make the price reversal zone go out indefinitely. So because you know it is a valid zone forever. For some reason, I just don't like it on my charts. I feel like that makes it too busy. So I actually don't even usually mark up price reversal zones until it's really, really close. I'll check if the current price is in a price reversal zone. Hopefully that answered your question about the blue lines, Alec. You place it somewhere and you check and see if it's accurate. So with this being said, I'd love to, we have, let's see, a little less than 25 minutes left. I'd love for some of you to show me what we learned today. Can you over having the fib? Yes, we can. I want someone first. Maybe Alec, are you at your computer right now? Are you able to show us how you would draw the PRPs now that we see that? Or let's see. Oh, you're on the phone. Okay, no worries. Let's see. Bird, are you on your computer? Are you able to show us how you draw up your price reversal points? Okay, perfect. All right, so I'm gonna go ahead and stop my share so Bird can take the role on this one. And then he's gonna show us how he would draw up his price reversal points. Yeah. Yeah. Go ahead and just share your screen and any chart you want. Maybe do, let's say, maybe GJ or AU or whatever your favorite one is.
Can you guys see my screen?
Yes.
Okay. Let me take these things off.
Do you have two of the same indicators there at the bottom? Those look the same to me.
Yeah, they were. I'm not sure what happened. Okay, so when I look at a chart, I typically either go for a weekly or daily to begin with to see if the zone is in a relevant, close to relevant point for like the long term. So for this one, if I look at GJ, I'll see that it's kind of consolidating. I would probably use this area and then actually either this one or this one, but I would probably go with this zone because, hold on. I would go with this price right here because it's hit it. Mm-hmm. These 2 points recently. So this is on my weekly. So remember that this is like very long term. So this is April and then this is back in last year, 2017.
Yes.
So then if I go like to the daily, I see that we're in between these 2 points. And ordinarily I would actually color these differently. I would say, I'll go to style and I'll make them black. And I would say weekly resistance.
Do you use different colors depending on the time frame?
Yes.
Okay.
I go weekly resistance and I put the number there just so I know where it is. I try to make it round numbers. So also weekly resistance 152.75. So then I can see that in the chart, and on this one I will go weekly support 141 or so. Mm-hmm. Okay, so as I come in the daily, I see that these points are a little bit more relevant. So then I would make this one the purple one that I usually use.
So I noticed you said the level that you want to at, but I noticed you didn't actually change the coordinates. Do you know how to do that as well?
Yeah, I would. Or you want me to go ahead and do that? Because I would ordinarily.
Oh, yeah.
Okay, I'm just trying to be respectful of everybody's time.
Oh,
so then to change the coordinates, so I made it 141 because round numbers, banks usually use round numbers for their Fibonacci, and they are the ones.
Right.
Move it. So I will go to write the coordinates, and you can just go to price.
Perfect.
And change it. So I drew 2. Hold on. So once again, you go to coordinates on your line, and it should change it. And then the same thing for this one. I said 152.75. Okay. So now that those are round numbers, we know like the overall, like, I guess, range where we're looking in. So now I'm on a daily, I can see that this kind of area is a little bit more relevant in the shorter term. Mm-hmm. So I will go to another line and I would make this purple so I can see it. And that's just what I do so I can, I can see what's more relevant in the shorter term.
Yeah, that makes sense.
And I'll do the same thing. I'll draw right there. Okay, so that's where I'll draw my support and resistance for weekly and daily, and I typically always come all the way down until I get to the 1 hour or 4 hour, 1 hour, depends. On this one, we see that we're inside the zone, so we're kind of consolidating here. And I could probably draw a trend line here, but this looks doesn't like it's going in any particular direction. So I could go here.
I do see that perfect hammer right at the top very recently. Do you see that as well?
Oh, right here, yes. It
Yeah.
is. It is ideal, and it did kind of follow through on it. Oops. Yeah, so we're kind of in the middle of right in the middle of a channel that's in the middle of a consolidation. It's in the middle of right in the middle of pretty much like 0.5. Oh yeah, I forgot. So also, what I like to do for the weekly, for the daily, is I like to draw a fib in between those two numbers, just so I can know like where we are. If we're close to a 0.5 or 0.168. And I also learned from Sunil, he kind of had a tip to put a 0.65 right after 0.618, because he figures that if it goes to 0.618, or if you have a target at 0.618, if it goes past 0.6165, it's much more likely to go all the way down.
Right. If the candles finish below that.
Yeah, we did. So he would have been wrong there, but
yeah. I do see the bodies finish it on that, so that would actually that how I would trade that is actually that's a potential buy right there.
Right here
on at this 0.65 after the red candle finished away. If you were watching it,
yeah, it would be. If I had to choose a direction it would go, I too would say buy. It looks like it's coming. If I had to choose, I would say it would probably come up to probably this point, but I definitely wouldn't enter a trade right here.
Yeah, I see that. I think that hammer was very recent, and that's very, very strong hammer.
Yeah,
it's a very long wick and a very small body.
Yeah, so, you see it came down very hard immediately. Yeah. We look at the 1 hour. I look at the 1 hour sometimes, just to see how the candles were formed in general, and you can see it was pretty consistent, except for this one. They were all going down throughout that 4 hour candle. One pair I was looking at earlier was actually got in this and I got out because I figured it wasn't a good trade. I didn't have enough. I got in there prematurely. Was this one, and I got in as I can't remember. It was this morning though, and I got in it and I looked at it briefly and I was like, okay, that's probably should get out of it. So I kind of once I got to even, I got out of it. I got out of it. I had it as a sell. I think I got in. I might be looking at the 1 hour honestly. I want to say I got in like right here, but I was on my phone. But I got out of it because I said I'm on my phone. I didn't really look at any charts. I just saw that we were right here on some reversal points that we've had before. So I was like, okay, I'm gonna hop in here, but then I chickened out.
Can you see if it looks like there might be a potential triple bottom there or close? Can you put a price reversal point on those bottom wicks at the very lowest point and see if that is a valid point on previous data, even earlier?
Okay, let me go on 4 hour. Oops. Oh, that's the wrong button. It's a trend line. Oops. So it looks like, it's been a pretty consistent price at 85.58. Going back further on the daily, not so much, but at least very recently. I see this one kind of hit a little bit. And then on the weekly. So right here, it hit on the weekly. But historically, not so much, but recently for sure.
Yeah. That was kind of interesting on that last chart or last time frame.
The weekly?
The weekly. It looked like there was a hammer on that one as well that we saw. Also pretty recently. Um,
Right here.
uh,
Wait.
Up a little more to the right.
Oh, this one.
Yes.
Oh,
Yeah. So that would also we see something happen pretty similar to what would happen to GJ on a smaller time frame, with
mhm.
there's that hammer and then a very strong red candle right afterwards.
Yeah.
So both of those were JPY second
Mhm.
pairs.
Yeah.
So we would see some confluence with that.
Yeah. Oh,
That
yeah. And speaking of JPY, do you mind if I look at UJ right quick?
yeah, sure.
Because I talked to you about this earlier. I got in as a buy. I got out of it, and you can see where I had marked up. So I had it pretty much as an Elliott wave. Um, so I saw that we were in a channel, and I had it going, up to this level, and bouncing off here. You advised me to wait, which I'm glad I did. And I got out of it probably a little bit prematurely because it's still been going up.
Hmm.
Why do you think, or what do you see to make this? I know you have the Head and Shoulders right here. What do you see makes it? What makes you think that it'll come here or to a certain level and reverse and not continue at this point in time?
So what I think is actually if you go out to a higher time frame, either the daily or the weekly, I forgot which I saw it on.
Mm-hmm. This is the
Um,
data.
try the weekly actually. Let me see that
Okay.
one real quick. And then zoom in a little more. We see a hammer right there as well. It's a green hammer at the very
Oh,
top.
yes.
So that also, again, with the long red candle after that, and
Mm-hmm.
that was the only one. We do see a really bad dragonfly happen right afterwards with that green candle after the big red one.
Yeah.
Not a very good dragonfly though. That's pretty weak.
Mm-hmm.
So overall, using Japanese trading style, we would which is very uh, potent for JPY pairs, especially the only major JPY pair,
Yeah.
UJ. Um, we would see that based off their own trading style, it would be fairly bearish,
Yeah.
which Japanese people like to trade JPY pairs more than anyone else, and of course they use the Japanese trading style as
Right.
well.
Yeah. Okay. I mean, I guess we'll see. You can see I was like, oh, this motherfucker's gonna make me rich right here. So, but I was like, this is going all the way up 30 to 7, but we'll see. If it does, it'll be weeks. So I'm not even in it right now, but I've been watching it. I have it on my demo to see where it goes to.
Okay. Yeah. So I want to further analyze this. So I'm going to take back control of the screen. Thank you so much for sharing.
Oh, sure.
Let me go ahead and take this one. And one thing I want to look at for UJ is the JXY. This is similar to the DXY. We can check that one as well. But on the JXY, it's the same thing just for the Japanese yen pair, or not pair, just the Japanese yen currency instead of the US dollar for the DXY. It's not as good because it does close. Like, for example, it's not closed right now, but during certain trading hours that are normally open for other pairs, it is closed. So we can see, yeah, if you look at the bottom of the screen, right there, if you look at the time stamp, we see that it goes on the 1 hour time frame, it goes 12, 13, 14, 5, not 15, just 5. So we know that it is closed for a while in between here, and there is a big gap because of that, which we don't like when trading. Of course, it's a little harder to determine this than the DXY, which doesn't have that issue. But with that being said, it's about to close is one thing we want to note as well. And also, we see that potentially it could be forming a flag. And if it is forming a flag, this should be just about the bottom. We can throw a mini fib on this. What I mean by mini fib is just more recent than this bigger one I have drawn. And we can see that it's at the 38.2 level, which isn't that strong, but it is potential, and I already did break it as well with a full body candle, but it could still, because this is an index and not an actual pair, we can see it respecting that and continue up. I don't think it will, just because it's already broken and there's a lot of other signs that it's going to continue to go down. But we could potentially see this being a flag and then the JPY continue to go up after that. So kind of hard to say at this point. It could go either way. But let's also look at the DXY, also really good to compare, because if you check the DXY and the JXY, then you should be able to determine what UJ is doing. In particular, this just happened on the DXY. We see at 9. What is there? Oh, that's weird. We see that there was this double top here. For indexes, you can't really use the price reversal points so much. You can use price reversal zones, but they're not so perfect. So overall, we should see, until this breaks, we should see US pairs going down from here, because we just saw this is very recent. This is a potential even decent entry for the short of the DXY. Of course, you can't do that unless you have certain brokers like LMFX can do that, but not very many brokers can actually short the indice, or index, excuse me. But we see that it's only 6 points off, 6 cents in this case. It's not 6 pips. And also we could see we also see the M forming as well as this one did. So we could see it break, but at least so far, no level has broken this Fibonacci point. I don't know if it's actually a relevant point. I don't want to zoom out and check that right now, but we should see DXY or dollar strength going down in the near future. What I would suggest you do is you go to the alerts, especially if you have a premium account. If you pay for tradingview.com, you have a lot more alerts than the free account. Then I would suggest, actually, there's an easy way to do it. You just have the price reversal point line, maybe put it, say, right there. And then actually put it up just a little higher. If it makes a total absolute new high, even higher than these point here, then that's something you'd want to know. So you click on this button right here, add alert at that line, and it uses everything for you. And if you have the free account, do the send email, and then just turn email notifications on your phone, and that way you'll get a push notification. If you are paying for it, you can use things like send text message or even notify on the app. And you want to, in the message, you can have it where it just tells you, it's crossing the line. Or if you want to be more specific, you can type in a custom message. You can say US dollar no longer good for short. Something like that. That would make sense. Didn't capitalize the S. US dollar no longer good for short. You click that, and then now it's in here. So if the price ever crosses this level, then I will get an email notification for that. And what I would also recommend, if you don't want to get annoyed by a random notification later on, is you can even set this to expire, so that if it does continue to go down, you don't want to use one of your alerts. You can just say, if this doesn't happen within a week, then who cares, because they would need a reevaluation anyways. So you can just do the expiration time a week from now, click save, and you're all set. So now if a week passes, that means it would have to gone down from there. Then it would automatically just go away. And even if price went up from then again, you wouldn't get a notification. So it wouldn't bother you. It wouldn't have an alert, wouldn't be wasting space there. So with that being said, we have very little time left. I hope that you all learned a lot on this session. If you want me to go over something in particular tomorrow, because tomorrow I'm doing another session, feel free to send me a direct message on Instagram. My Instagram handle is BlakeOlson7. And I do get a lot of notifications, so definitely message me on there, and I'll give you a follow back and everything. And if there's anything else, and you have any last second questions, or we should be all set. Thank you so much for attending. Hope you all learned a lot, and I'll see you all tomorrow. I'm actually gonna post this on my Instagram story. If you want to be on my Instagram story, say something in the chat. Give me some clout. All right, see you all.